Sure. We definitely would expect Bank Indonesia to match each and every Federal Reserve Bank rate increase, primarily, as we said earlier, because of Indonesia's rather high reliance on foreign capital inflow. So that to maintain that interest rate differential will be really important. We also expect Bank Indonesia to intervene in the foreign exchange market rather aggressively, but not to an extent to reverse the trend of depreciation or to slow it down to the extent that it will be the rather, let's say, less depreciated currency in Asia. We expect Bank Indonesia to be maintaining its rather accommodative stance in the first quarter, refraining from a hike. Primarily because of Indonesia's economic recovery is still ongoing and rather fragile. So the bank will be interested in being accommodative and support the growth. But from the second quarter onwards, the stability of exchange rate as well as the flaring up inflation will likely surpass the other objectives, so that it will start to hike its interest rates once. And in the second half, we expect BI to hike by 3 times, both to stem the inflationary pressure domestically, but also to stem the capital outflow. One caveat I have to make is that this forecast is based on Federal Reserve making 3 hikes this year. But there's a significant likelihood that Fed will go higher, will go more aggressively, like Goldman Sachs saying 4 times, and JP Morgan, Jamie Dimon says that probably more than 4 times. For each of those increase, we would expect Bank Indonesia to match that hike.
Okay, so how many times do you expect Bank Indonesia will increase the interest rate?
For now, we are expecting 25 basis points each. Yeah.
Okay. So considering the decreasing numbers of COVID-19 cases in Indonesia, despite the spread of variant Omicron, what economic stimulus do you think will be effective for Indonesia's economy in 2022?
In general, we would expect more of the support measures instead of the stimulus measures to be in place. So that will include livelihood support for poor households, as well as interrupted small and medium enterprises. Those will stay, and infrastructure development, so fundings and capital expenditure on infrastructure will continue. That will be happening regardless of the COVID-19 situation, because that is among the high priority of the Jokowi administration anyway. That will also support the growth, especially public investment. But other kind of stimulus measures, we would expect it to be actually pared down. The finance ministry appears to be adhering to its fiscal discipline principles, and with the evidence arise from the tax bill the tax revision last year, the finance ministry is definitely going towards the way of fiscal consolidation instead of further stimulus measures. That also will signify its consideration and ensuring the confidence of foreign investors in Indonesia. The country is pursuing a rather disciplined fiscal policy, which will help stem the capital outflow as well. One important note I want to make is that the burden sharing program between Bank Indonesia and Ministry of Finance is likely to wind down, if not phase out entirely, in 2022, because that measure is highly unconventional and has triggered some controversy among foreign investors. And we would expect, with the economic situation improving, tax revenue increasing, the necessity of initiating that highly unconventional program to decrease.